Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Today I will be presenting Tracking the Forex Market Together webinar and part 1 between 9 and 9:45 GMT using a live market code page as a simple market tracking technique, and I will give the link for the same. And I'll also focus the camera over there at the live market code page. Currently, you can see that euro is trading around 1.6163, 1.6165, and quickly came down to 1.4144. And before 8:30 GMT, 30 minutes start of the European session, and then quickly they gained back the levels, and the high was 1.4193, 15 pips negative net change is seen. In the case of GBP again, they made a quick drop to 60.55, currently trading around 1.6077, 1.6081, 1.6140 was the high, and you come across 45 pips negative net change. And yen somehow managed to come above that of 81, 81.18, 81.21 at the current levels, 23 pips positive net change is seen. And in the case of CHF, and they gained nicely, and currently trading around 91.43, 91.46, 90.77 was the low. Yesterday they made a quick drop, and then today they are making a big rise, and 91.48 is the high, and their intention is to take it up only. 57 pips, 58 pips positive net change is seen. When euro is making only 20 pips negative net change, CHF is making 58 pips positive net change. So euro CHF, they want to take it up. Already they gained the levels of 66 pips because of that. And in the case of Canadian dollar, you find 97.54, 97.59 on the current levels, 97.45 is the low, 97.70 is the high, 4 pips positive net change is seen. And in the case of Australian dollar, is about 8 pips positive net change. It has come to all-time high, 1.0250. Currently trading above that of 1.02 level. And all 3 days they have been gaining levels in the case of Australian dollar. And normally the commodity pairs lead the rally and lag behind. That's what we will be seeing it today. And now you find that only 7 pips positive net change is seen. Australian dollar is making a consolidation around 1.02. 1.0217, 1.0220 are the current levels, 1.0188 is the low, 1.0250 is the high. So when Canadian dollar and Australian dollar are showing positive net change, we can understand that they are trying to handle the crosses. And you come across the crosses like Euro GBP, they have come to that 88 area, and yesterday they went up to 88.08 and then came down. Today they have come to 88.12 and then slowly coming down. You find 10 pips positive net change. But in the case of Euro CHF, you find about 68 pips positive net change. Already it started gaining from 28.57 to 29.50, about 100 pips gain from the low. And they are near that at the high, and they, you know that they dropped about 160 pips yesterday, and the day before yesterday and yesterday. So they are just coming back again with a big bang and trying to rise it. And in the case of yen crosses, yen has gained about 25 pips, and euro and GBP are showing nominal negative net change. So as a result, you find that euro yen is showing positive net change, and GBP yen is also showing positive net change, but nominal net changes are seen. Only 4 pips in the case of GBP yen and 19 pips in the case of euro yen. So this is what you come across the current market condition. So let me go back to that of the PowerPoint presentation, showing the initial lows and the highs, and then from there I'll explain how exactly you have to read the market and then take the trading positions. These are all the initial lows and the highs recorded today on Friday 25th of March, and they are given indicated on a daily basis. During the Asian session live market analysis, I always refer to that of the initial lows and the highs set by 3:30 GMT. This is the one they use it as a reference level, so we should also try to use the same without asking what is the logistic behind why we should note it down around 3:30 GMT, etc. This is how the players do it. We will track them and we will trade along with them using their own tool rather than any other tool. Then euro is formed the low 1.4151. Currently you find that 1.4144 became the low, and then subsequently after a quick downward stop, and it has come to 1.4164. So high is intact. High also they made the breach. 1.4183 was the high. They went up to 1.4193 during the close of the Japanese session, and then came down and made the spread bigger in the case of Europe, and made the upward stop and as well as the downward stop. In the case of GBP, they had done similar move, and during the gap time they made an upward move to 1.6140 above that of 1.6125, and then they made the downward move from that of 1.6100 to 1.6055, and then come to that of 1.6071. Still it is not above that of the initial high, whereas in the case of Euro they have taken it above that of the initial high. So if they take it above that of the initial high and stay there for more than 30 minutes, then we will come across the upward move up to that of the high. Then if they cut the high in less than 30 minutes, you will find that they will go above and make the extended upward move. So let us now try to read those things using this live market code page and then take the trading decisions. The case of CHF 9077, 9087 are the levels, and their 77 is intact, and 87 they have breached and formed a new high 9148, currently trading around 9144.47. So they made that upward stop in here and made the extended move above that of the initial high. Then in the case of yen, 8095 and 8103 was the high. They had breached the high and formed a new high 8123. Here again that extended move is seen above that of the initial high. In the case of Australian dollar, you find 1.012. In the case of Australian dollar, you find 1.0188 is intact. They are not breached it. 1.0213 was the initial low. They went up to 1.0250 and gone above that of the high about 30 pips. Then came down. Currently it is trading around 1.0222, still above that of the initial high. So they could gain further up in the case of Australian dollar. So once you note down the initial lows and the highs, which are set around 3:30 GMT, that can be used as a reference level, and if they are sustaining above there or sustaining below there, accordingly we can take trading positions quickly. And in the case of Canadian dollar, 0.9753 was the low, and they made a breach. 9745 has become the new low, and 9770 is the high, which is intact. Still, you come across in the case of Canadian dollar, positive net change of 5 pips, and Australian dollar is showing about 17 pips positive net change. So you find overall that they are making the contrarian move because both the commodity pairs are showing positive net change, and it's a very good opportunity to trade crosses. You know that whenever they are making contrarian moves, we focus on the crosses. So let me focus the camera over that of the other slide. In this tracking the forex market, earlier I explained in the previous time because many people wanted to know about how to trade the crosses. So I'll explain that. Before that, let us understand the timings of the market because there are some newcomers who may not be aware of the timings. So currently you find the Japanese session is 0030 to 730. 730 to 8 is the gap time, and 8 GMT the European session starts, and we are at around 9 GMT and 1 hour past the start of the session, and 13 GMT the European session gets over. The daylight saving system is on in US, and still in Europe it is not introduced, and from next Monday we will come across this European session will be the gap time before the European session will be from 7 to 7:30 GMT, and European session will start by 7:30 GMT up to 13 GMT, and the rest of the things will be the same. 13:30 GMT will be the gap time before the start of the US session. 13:30 to 20:30 GMT will be the US session. Gap time will be 20:30 to 0030. All the gap time moves are false move, and you know that during the gap time before the start of the European session, they made a quick gain in the case of Euro and GBP, and everybody was telling they are going to dump. Because in chat and many clients just said that they are going to dump during the start of the European session. Exactly, they did it, and then they are just slowly gaining it. And Euro, they quickly gained it and again made the dip. And also in the case of GBP, they have made the dip. So they are making some volatile moves now. So we will try to capture the moves and for our trades. Then before into that, let me give you some of the information which you need to use it if you want to follow my trading system. So you have to track the market using the GMT time, because the players are using the GMT time to track the 24 hours market. So let us also use GMT time frame. Then identify the session. I have given the session times and the gap time. So you understand that 1.5 hours from the start of the session and 1.5 hours towards the close of the session are the early and the late sessions, and then in between you come across the mid sessions. The players handle the majors during the start of the session and the late session, and during mid session they handle the crosses, and also during gap time they make the false move or the stop ins. So accordingly we can just take trading decisions. Depends upon the time, our trading decision has to change, because the timing is more important for the players to make moves in the market. So if you follow those timings correctly, then we will be able to read their moves clearly, and based on the type of moves they are making, we can do the trades. So suppose, for example, they make a downward stop and quickly come above that of the initial high initial low in less than 30 minutes. We know that they have done a downward stop in order to make a gain. So we can quickly take a buy and then exit near that of the high as a swing trade. Then in case if they make a false move up to that of the low and then come up, then we know that they will go up to that of the high and then breach the high and stay above there for more than 30 minutes and continue the extended move. Then we can take the buy position during the false move anywhere in between the low and the high. Then we will be able to see that during an extended rise, quick rise 3 times, or in 2 hours time, we will be able to see they would have gained about 90 to 150 pips. Then quickly drop it there. Then they are making an intentional move, slowly drop or slowly rise. We can only trade along with them. And in case slowly every 30 minutes, if they cut the low, then we have to just take a sell and buy trade. If they cut the high every 30 minutes, making an intentional move, we can do a buy and sell trade, whatever the level they are, and try to exit within the same day or within the session. So this is how, identifying the moves, we will be able to take trading decisions. Then make a note of the initial lows and the initial highs and the net change, and also compare it to that of the current market level. See, as I explained, now that I have taken down the 3:30 GMT, the initial lows and the highs, and compared it with that of the current lows and the highs, and said that they made a downward stop in the case of Euro and GBP, and around before 30 minutes completion. So 8 GMT they started before 8:30 itself. They made the drop below that of the initial low. That means we have to wait for 2 hours. That means they are doing an extended downward move. So when we understand they are making an extended downward move, there is no point in taking quickly the position. Wait calmly. See that the last 30 minutes of your observation, they don't breach the low. Then try to take near that of the low a buy position. You will be able to see profit during the day or within the session. Then identify the currency which has made a spread between 40 to 50 pips or sometimes 60 pips. And then if you try to take positions in those currencies, you will be able to do some swing trades. Say if it is like USD yen, for example, 80.95 is the low, 81.23 is the high, hardly about 28 pips spread. If you try to take a position, you can earn about 5 to 10 pips. So instead of blocking your usable margin in that type of currency, you can just take positions, because while taking positions, you have to block the usable margin and try to take in a currency wherein the spread is high, so that you'll be able to really make some good profit. Then entry decision. When within the session we can buy near the low or sell near the high when the low or high are not breached in 30 minutes from the start of the session. So today's condition, they breached the low. So this is not applicable. So we have to wait for 2 hours. Then from the session start or towards the session close time. So now they breached the low around before 8:30 GMT. So we will wait for 2 hours or we wait at least for 30 minutes that the new low has not been breached in our observation of 30 minutes. So let us not worry about the session start time because already it is 1 hour, 9:16 GMT. So we will give another 14 minutes. By the time I explain all those things, then we will be able to take a trading decision on that. Then exit. So how entry is when the market is near that of the low, we will try to take a buy position and not breach that low for 30 minutes of our observation. And we try to take a sell position when the market is near the high and not breach the high for more than 30 minutes. And in case if they breach the high, we wait for 2 hours, afterwards take a sell position. So that is how, based on the timing, we identify the levels and related to that of the high and the low, what they are set in the live market code page, and simply take the trading decisions. We are in a position to make easily the profit and identify the currencies which are making more spread and try to take positions there, so that it becomes much easier for us to take trading decisions. In case if they breach the high, as we have seen in the case of USD CHF. So what sort of trade we have to do it? I'll explain it using the next slide. So exit position with a profit with a going is good near the opposite side. Suppose you have taken a buy position, try to close it near that of the high, or if they breach the high and stay above there for more than 30 minutes, then we try to close it after 1.5 hours. The last 30 minutes they stop cutting the low, then we know that okay, that is the level, we should exit. Then afterwards they may make some little bit volatile move on the higher side because they quickly gain the levels to offload the positions. They quickly drop the market to buy positions. So that we need to understand. Then we do fearless trade. We are not worried when they are dropping it. We know, okay, you are dropping it to buy. Okay, I'll also buy. You finish all the buying so that you don't cut the lows for 30 minutes. Then we will buy along with you. That is how we take decisions. Then you stop because our reading can go wrong at any given time. And that it is not a gospel truth or something like that. So obviously we make our understanding and perceptions of the market, and the traders can suddenly, or the players can suddenly bring in some knee-jerk reactions in the market. We cannot take unlimited risk. So obviously we have to keep some 20-25 pips, or 30 pips stop, or sometimes if it is the cross, then can keep about 50 pips stop. And then once the position makes profit, once the position makes profit of 20-25 pips, we keep stop at entry. So that eliminates the risk first of all. The risk in trading is basically making loss. So first, by keeping stop at entry, we eliminate the risk. Then afterwards, we trail the stop in a profit making position when the market is moving in our favor, and also keep a limit near that of the high. When the market is making further rise, we can move away the limit and we should not move backward the stop. So if you could follow that, we will be able to maximize the profit without any bias. Then entry exit can be fine-tuned by keeping limit orders. Instead of trying to grab the position at the market, suppose euro is trading around 1.4147, and if you want to buy it, 1.4141 is the low, and they formed the low, and 1.4144 was the low, and they breached it, and 1.4141 is current low. So we can just keep 10 pips below a buy order and see whether they will be able to fill it. In 30 minutes of our observation, if they are not filling it, then we modify and try to take it at the market level. So in trading, we follow patience. So patiently we enter into the market and exit it using a trailing stop and a limit, a moving limit, so that Either we accept a small profit or a big profit, maximize the profit, and we avoid making a loss. So this should be the clear-cut objective of any trader, whatever be the forecast. But trading strategy is alone going to give you the profit. So I can simply say that euro can go to 1.50 in down the line in about 1 or 2 months, and definitely US dollar is under pressure. And if we try to take a buy position, if they drop euro for about 100 pips, we become jittery. No? So the players know very well, they create the market sentiment and act against that of the traders. Keep that in mind, and our position taking and holding the position is more important rather than simply imagining that I'll be able to earn about 200 pips profit or 300 pips profit when they make a very big rise, because the players create uncertainty at every stage. So they don't give a clear-cut indication to the traders, okay, this is the buy level or this is the sell level. For some, it will appear like a buy level. So for certain others, it will appear like a sell level. So only then, either way participation will happen from that of the traders. The players can earn either way, making an upward stop and a downward stop. See, during that of the close of Japanese session, they made an upward stop in the case of euro. And at the time, I was explaining people that they could make a downward stop because it's weakened. And they said that when euro is around 1.4189, do you think that it can drop below that of 1.4151? So I just said there is a potency. They could do it in a swing process. And now you find that they increased it. So what appears impossible, the players make it possible. So we have to keep that in mind. When the sentiment is very, very strong, doesn't mean that they cannot break it. Just like that they can break it, because they get that clear-cut information from that of the sources that the traders are long and the traders are short. These are all the levels where they have got the stops, so they can move the market accordingly to earn money. So always avoid impulsive trading. Don't try to jump into the other market. Market will give plenty of opportunities. And you know that euro came down very quickly, 1.4144, and then quickly jumped up to 1.4167. And if you would have become impulsive, you would have taken a buy there. And later on you find that they again showed 1.4141. And then now they have come to 1.4155. Above that of the initial low. In just a matter of 30 minutes, they make such moves. So market keep coming, keep visiting these levels. So there is no need to become impulsive and try to jump into that. And also in the case of GBP, they dumped it just like that to 1.6055, and within seconds they just raised it to 1.6079, and then they have been holding it and again made one more dump up to that of the low, not breaching the low 1.6055, and then come to 1.6074. This is how they just it's like the cap seller trying to throw the cap so that all other monkeys will also throw the cap. So they just induce the traders holding long positions to just cut off the positions out of fear when they make a quick dump. Because when it is just a matter of only 20 pips move from 70 to 55, 75 to 55, but if you see the red candle formation in the chart, it would have given a real impact on that of the traders, and they will simply cut the position later on repent. So this is what happening day in and day out in the market. In the event if they cut the low, initial low or the initial high and breached it and sustained there. One of the examples you come across now is Swiss franc. So Swiss franc 0.9087 was the initial high. They breached it and they formed a new high, 0.9148. Still they are hovering around there. In such a situation, what do you have to do it? We have to identify the type of moves. So now they are making the extended move in the case of USD CHF, and it can become an intentional move if they just continue to cut the high every 30 minutes for more than 2 hours, then you identify that it is an intentional move. So extended stop and they make it only during the trend reversal. Last week you would have noticed it. In the case of USDN and USD CHF, they made a phenomenal drop, and in the name of intervention, they just reversed everything. So let us not go into the stories, but this is how that extended stop ends happen. So with regard to the extended move and the intentional move, based on the timing, you will be able to differentiate whether it is a stop end. If it is less than 30 minutes, extended move is around 2 hours, intentional move more than 2 hours. So based on the timings with regard to the market swings, you can identify what move they are doing it. Accordingly, we can take positions. If they are making an extended move, wait for 2 hours to enter counter trade. That is, after 2 hours of rise, you can do a sell near that of the new high, or you can just take a buy position near that of the initial high. So in the case of USD CHF, 0.9087 was the initial high. We can just keep a buy order there, or we can keep a sell order depending upon the rise they are doing it. Okay, so that is how we do a breakout trade. Otherwise, I call it as a technical trade. And such technical trades, buying above that of the initial high and close it during that of the extended move within 2 hours or in the same session. So that has to be closed within the day. We cannot carry it to that of the next day because they may show loss to us. So if they cut the high or low and stay above high or low for more than 30 minutes, we can do a technical trade of sell below the initial low or buy above that of the initial high, identifying the intention. In the case of GBP, they cut the initial low, for example, 1.6100, and still they are staying below there. So, but they formed the low 1.6055, and after the second dump also they are not breached it. So once they stop cutting the low for 13 minutes, understand that they are handling the crosses for that. They are not breaching the low, at the same time not going above that of the initial high, initial low, then we should not do a sell and buy trade there. And if they make more than 75 pips net change, so now you come across 47 pips negative net change. If it becomes more than 75 pips negative net change, then within the same day they will not reverse it. Then in that time you can just take a sell position and book about 30-40 pips profit, because they could drop it up to 150 pips or 250 pips negative net change. So this is how we review the market only using the live market code page and identify the type of moves they are doing it, and then try to take the positions. Now trading crosses. Many of the people wanted to know how exactly the crosses can be traded, because how to recognize the cross moves. But basically, the players move the majors to bring in movement in the cross. That we have to understand it. But many are giving the interpretations that the crosses move based on that the majors are making moves. But the players only handle the 4 majors and the 2 commodity pairs, with which they bring in the moves on the upside or the downside in all the respective crosses. And if you can read the live market code page very carefully with regard to the crosses and also the net changes, you will be able to understand that they make the move first in that of the major, and that is being reflected in the case of the crosses, not other way about. So choose the mid sessions to trade crosses. First of all, like now, from the start of the European session, 1.5 hours is over. It is now 9:30 GMT almost. So we can choose from now till that of the 11:30 GMT. So 9:30 to 11:30 GMT will be the mid-European session. So during that time, they will be handling the crosses and you can take positions at that time. Similarly, mid-US sessions. And during that of the session start and session end time, they will be handling the majors. So when they are handling the crosses, you try to take positions in crosses. You will be able to do very good swing trades. Then track the crosses with regard to the net changes. So now let us assume that we want to do a trade in the case of Euro GBP. or Euro CHF, whichever cross, okay, whatever the cross you say, I'll just explain afterwards, but let me take a simple example, Euro GBP now. So in the case of Euro GBP, currently it is trading around 0.8806, 0.8809, 0.8812 is the high, the low is 0.8785, and you find 13 pips positive net change. And the spread between the high and the low is hardly about 27 pips. So we will not choose the pair because they are consolidating there and they wanted to hold and induce the lower level short sellers to come for short covering before making a drop. So in the case of Euro CHF, 1.2934, 1.2937 are the current levels, 1.2857 is the low, 1.2952 is the high, 54 pips positive net change is seen. Now, Euro CHF we wanted to choose, for example, because the spread between the high and the low is around 100 pips. So there is going to be a good swing potential here. And now we will relate it to that of the majors. So Euro is a numerator in Euro CHF. In that case, you find Euro is making 22 pips negative net change. And CHF is a denominator and which is showing 47 pips positive net change. Normally the relationship will be the Euro and GBP are expected to move in opposite direction. When Euro gains and USD CHF is expected to drop, and when Euro drops, CHF is expected to gain as a USD weakening or the USD strengthening move. But with regard to the number of pips, Euro has just made a dip of 23 pips, whereas CHF has gained about 46. This is a double of it. So that means that they wanted to gain the levels in the case of Euro CHF. So any dip in the case of Euro CHF, we can try to take a buy. Now, what is that level we can choose? 1.2857 we may not see because there is about 50 pips away or 70 pips away. Then the next psychological level 1.29 and they are around 1.2927 and 1.2929 and the next psychological level is 1.29. So we can try to keep a buy order around 1.29 and see how they are handling that particular psychological level because the high is 1.2952. So about 50 pips from that psychological level they gained it, and from that of the high they had dropped about 25 pips. So they could make just a small dip and then go up, and we'll just keep initially a buy order around 1.29, and if it is not filled then we'll try to take a buy position at a higher level. So this is how we track the cross using that of the net changes in that of the respective majors, Euro and CHF, and also try to see whether it is near that of the low. And probably now I don't have that record here, but I remember Euro CHF formed the initial high 2895. So around 1.2829 will be a good buy level because it has gone above that of the initial high and it is still above that of the initial high during European session as well. In that case around 1.29 if they come down to we'll buy, otherwise we'll slightly modify about 10-15 pips and try to buy it at a higher level. So this is how we just make a reference to that of the initial lows and the highs and the net changes in the case of the majors and the respective cross, and if it is trading above that of the initial high and holding more than 30 minutes, we try to do a buy and sell as a technical trade. So there is no difference between that of the trading in the case of majors and also crosses, but only thing is in the case of crosses we try to relate it to that of the respective majors, but in the majors we straight away refer it that particular currency and just understand the overall market trend, whether it is USD weakening or USD strengthening or a contrarian move. Accordingly, we take positions. So if it is Euro GBP position, we review Euro, we review GBP, and then take a decision with regard to Euro GBP cross. Then choose a contrarian move times for trading, and then you will get very good profit. Say for example, they rise Euro as well as rise USD CHF day before yesterday. They have been doing it. and we saw a very good rise. And before that, they made a quick drop in the case of Euro as well as USDCH. That is a contrarian move. And at that time, if you would have taken a buy and yesterday you would have exited out of the position, you would have earned about 200 pips profit. So when they are making contrarian move, if you try to enter into those crosses, you'll be able to really make money. Say for example, in the case of USD CAD and the Australian dollar, they are making the contrarian move on with a positive net change. If we try to take a position in Australian dollar CAD cross, we'll be able to get good swings there. Then in the case of crosses, we need to have some caution because they can do one-sided moves in the case of crosses for 2-3 days. And if you are against the market, we need to have adequate equity to hold the positions. And secondly, they could make frequent stop-ins. So the stop has to be about 50 pips, not like the majors 30 pips. So we should be able to accept a bigger loss of 50 pips if you want to trade in the case of crosses. If you try to keep a stop of 30 pips, very quickly they might fill it. And also in the case of crosses, the spread between the bid and ask is more. So obviously, you'll find because of that, the profit booking also, it will not be a tight spread and there will be a variation and you should be able to accept it. About 4 to 5 pips or 7 pips will be the spread between the bid and the ask. Then in the case of crosses, the volume is relatively low, so they can make frequent stop-ins and we should be able to withstand that. So in the case of crosses, if you want to trade, whenever they make a quick upward stop-in or a quick downward stop-in, try to enter. And if they make a quick upward stop-in, try to take a sell. And if they are making a quick downward stop-in and stop cutting the low for 30 minutes, take a buy. Similarly, stop cutting the high after a upward stop-in. For 30 minutes, you take a sell. Then after the stop-in, they will not do in 5 minutes another stop-in. Okay, so if you try to take near that of the high and keep a stop of 50 pips above that of the market, then the chances of hitting it is very less. And also they will come to that of the initial high. You can easily keep stop at entry and try to take a profit in those positions. Now coming to the forecast, Euro and GBP are expected to make swings and rise in this particular session. And also they are doing now, as per our market reading, the crosses because Australian dollar and Canadian dollar. Okay, now Canadian dollar has become negative in exchange slightly. Still it is 0.0000 only. So let us see whether they are doing the USD weakening move or the USD strengthening move and then try to take positions. So now let us decide with regard to the currencies. Now Euro, they cut the initial low 1.4151 and formed a new low 1.4141, just about 10 pips downward stop, and fully they have come above that of 1.4151 and staying there. So we will try to keep a buy order. $1.4152, just about 1 pip above that of the initial low, with a stop of 30 pips. So these positions, these orders, I'll keep it and wait for another 10-20 minutes. And if they are not filling it during that time, then I'll try to modify and take it in the market like 51.57 or 51.60 like that. And then wait to keep stop at entry immediately. Okay, so this is only a limit order. I have not taken a position in the market. I will not jump into that. I will just wait whether they are giving a fill, because market means swings. So they have to kill the time of nearly 24 hours. Make swings. Only when there is a data event or towards close of the sessions, they can make big moves. And not all the time they can make big moves. It is next to impossible. So definitely they will be making swings and induce the traders to do the scalping. At the time, you might see that our order is getting filled. So that is why don't think once it goes up, it will not come down. So They create the depression that way and they keep swinging in the market. It's a mid-session, so they will not make any big moves straight away. They will just handle the crosses first, and later on only they will come to the majors again. In the case of GBP, 1.6055 formed the new low, and still in our 30 minutes of observation they are not filled it. So it is still below that of the initial low. So we will keep a buy limit order just 1 pip above that of the initial low, recent low, and see whether they are giving a fill and a stop of 30 pips. Okay, now let me, in the case of CHF, we can just keep a buy order around 0.9090. That is quite far off, so I will not take a position there. In the case of Australian dollar, it is around the extreme level. So no buy and sell trade. Wait for them to do an upward stop and then try to do sell and buy trade. Then in the case of Canadian dollar, the spread is very, very low between the initial low and the high. So no trade. Now we will come to that of the crosses. Now GBP yen. Yen has got a very low spread of 28 pips. So obviously, if you try to take a position in GBP yen, the moves will be exactly similar to that of GBP, as yen is not making moves at all. So hardly it can contribute about 1 or 2 pips. Otherwise, if GBP goes up, GBP yen will go up that much pip. If GBP comes down, GBP yen will also come down that much. So instead of taking position in Euro yen and GBP yen, straight we can take in Euro or GBP, because yen is not contributing much to that of the cross. So we will go to that of Euro GBP. Euro GBP, the spread between the high and the low. So the low is 0.8785. The high is 0.8812. Its spread is very narrow and 12 pips positive net change is seen. And they are holding around 0.8805. So they could make an upward stop and make the spread bigger before making a drop. So I'll keep a sell limit order. As I explained, during stop-ins, we are trying to enter into that market. Okay, this is another example. We don't straight away enter into the market in the case of the crosses, and we envisage a stop-in because they are consolidating here, and before making a drop, they will make one upward stop-in. How they have done it in the case of Euro and GBP, they made an upward stop-in and came down, made a downward stop-in and gone up. So those stop-ins times are our trading opportunities. So we'll keep the limit order. If they fill it, fine. Otherwise, we don't regret for that. We will not just like that become addicted to trading, simply taking a position and later on asking so many people whether it will go up or come down and things like that and become restless. So when they make an stop, upward stop-in, so what could be the potency of an upward stop-in? So 0.8812. From there, they can go up to 0.8825. That is one of the psychological level. Then another one is 0.8850. Another psychological level. If you see about, they have done the spread of only 18 pips. That is, net change is 18 pips. Whole from yesterday, they have been consolidating around 98 area, making a little bit of downward stop and just making a new high about 3-4 pips every time. So we will keep about 30 pips. They may not do on the higher side much because a lot of traders would have turned long also. So they will see that they don't, those who are holding long, they are not booking profit. At the same time, they hit carefully the stops and then drop. So there comes the smartness of the players. So 1.8825 could be the next psychological level. So they could do up to 8827 or 28. So we will keep sell limit 0.8825 with a stop of 50 pips. Hope you are able to understand how on what basis I have taken a decision to take the sell. I am keeping a limit order. I am anticipating about 10 to 20 pips stop ends or 30 pips stop ends above that of the current high 0.8812 in the case of Euro GBP. So about the next psychological level is 88.25, and they may go up to 88.27 or 28, but I'm not keeping it there at 88.28 for the simple reason they may show it in the market, our platform may not fill it. So I'll keep a definite order because the platform providers are so clever, and they know that what sort of order is there making a stop, and if you keep a stop, they will fill it, and if you keep a limit order, they don't fill it. So you have to understand the limitation there. So keep 3 pips below that, 88.25 if they keep a stop. Keep the limit sell order, and 50 pips above a stop. And if they fill and come down quickly below 88, you keep stop at entry. Then in the case of Euro CHF, I told you that earlier initial high. In the case of Euro GBP, the initial high, what they have said, because I forgot to mention it, 0.8807, and then they made a 5 pips upward stop, and they are just hovering around that of 8805, 8807 level. So that is why I am expecting one more upward stop and before the end of the mid-European session. Then they will dump it for the weekend. So before that, we will try to take a sell position there when they are making an upward stop. In the case of Euro CHF, I told you that around 1.29 was the initial high. They are holding it. So around that of 1.2915 will try to keep a buy limit order. A stop of the trade. Okay, this is how we are trying to take the positions. I just kept the orders for 4, and they are all only orders. Still, they are not being filled. I'll watch the market, and if needed, I'll modify and take it in the market so that I'll have a definite profit. I will not take any position when the market is looking uncertain to me, in the sense based on my concepts of understanding the live market code page, which I explain to you every time. So I'll review the trades when I come back by 14 GMT. Meanwhile, what are the questions which are asked, I'll take up those questions for answering. I'll just minimize the PowerPoint presentation. I'll focus the camera over that of the live market code page here and take up the questions which are asked. Okay. Now trader, interestingly, the initial high and the low this Friday morning are so similar to that recorded on Monday. Yeah, that is how they do that swings in the market, just drag the market. And see, actually what has happened, let me tell you what the players have done it. See, they have been accumulating position in the case of Euro from 1.28, 1.32 and 35, 37, all those positions above 1.40, 41, 42, they are just trying to book profit, lighten their positions. Then you know very well that after lightening the position, when the market is not moving, a lot of traders sell. So when the traders sell along with it of the players, they don't like it. They just buy it because they want the traders to buy from them. So players sell, the traders should buy with a bullish feel. When the traders sell there, the players try to buy those selling and make one extended upward stop and induce them to do the short covering. Then afterwards, hold it around 1.41, 42 and just sell it to the people. So I will not call it as a bullish market. The players are holding and trying to sell, lighten their positions, and they are going to make an upward stop and before making further drop next month. So during such upward stop, and if we try to take the sells, then we will be making very good position trades, because we have come to the fag end of this month of March. So all the so-called bullishness will gradually dilute. Then now trader, can we consider Monday initial highs and the week initial? So that means they have hardly done anything. They have been holding the market and liquidating their buy positions. It is very evidential. Then trader, GBP fell by 80 pips from morning. Is it still considered a dip or a drop? Okay. Whether you use the terminology dip or the drop, they are all only just relative terminologies. In order to understand what they are trying to do, we have to discuss about it. For that, we have to use some qualitative attribute like a dip or a drop. And there is no hard and fast rule that only 30 pips should be called as a dip and 35 pips should be called as a drop and things like that. Depending upon the type levels wherein the stops are there, they try to hit. So you can call it as a dip or a drop according to your convenience. DD. Because I use certain terminologies in order to make it very simple. And if you find it is confusing, you can call everything as a drop also. No problem. Or players use friends who tell you all these things. Actually, I gathered information through various sources how the players are doing it. Beyond that, I will not be able to tell you. Then, okay, how do we know? What is extended move? Extended move is a type of move which is being done for about 2 hours. They cut the high and stay above their high for 30 minutes and then make 3 successive gains above that of the recent highs. So first cut was about 40 pips. Then they continue to make another 40 pips, another 40 pips cut and make about 120 pips rise in 2 hours. And they are all quick moves. Quick moves are false moves in the market. They mainly quickly gain the levels without buying much in the market in order to gain the levels and book profit with regard to their buy positions. Can we see GBP 1.64 by next week? GBP is not going to drop much. It appears that GBP is a falling knife. No, but actually you find that next month Euro could be making the drop, but GBP will be making sideways move and gaining because they wanted to drop Euro GBP correspondingly. And also, the main purpose of holding GBP here and making it appear weak, it's not because of fundamental and things like that. If the fundamentals are to be really considered, GBP should be trading around 1.4555 level. And similar in the case of Euro. But see, we can talk so many things about that, but I do not want to bring in any sort of controversies. But the basic idea is they can just make the swings, those levels, and create, use GBP for creating the bearish field, and subsequently they will use GBP to create the bullish field and dump Euro. Later on we will understand next month. This is so much information. Can we go over? Yeah, okay. Because the time is very short. And you please refer to that of my earlier webinars and my trading system also, Manu. I explained it in detail. What happens if they don't break the low in next half an hour? But after that, what happening in the GBP in the last 3 days? Market does not look to be. See, when you considered all the drops from the various days, it will appear it's continuously dropping. But you just observe it hour to hour and 30 minutes to 30 minutes, then you will be able to understand it much better. Okay. Yeah, okay. So I don't have time to just go through some more questions here. I think I have to wind up. Probably during the second part, I will try to reserve these questions and answer to those questions. I'm extremely sorry that I've taken a long time in explaining it. Okay. Okay, then I'll go back to that other PowerPoint. You should excuse me, those I have not answered the questions. I'll come back to those questions during the second part because they will be available in the hotcom. I'll just go through that. And answer to those questions. And also I just kept the limit orders, as you know that you can make a screenshot and or make a note of that. These 1.4. Okay, now euro has become a position. So that got filled. It has come to 41.44, 41.46, and GBP 62.56 still has not come, and euro GBP has not gone up, and euro CHF has not met the dip yet. I'll wait for another 10 minutes and then modify the orders, and I'll not erase anything. I'll just continue here why I changed that orders and modified and take the positions. Everything I'll explain and show it to you during the second part of the webinar, tracking the forex market together again. So you come back please by 14 GMT, and I'll explain what happened to those positions and also explain to you some of the other concepts pertaining to cross trading, the trading in the case of crosses, and also answer to the questions which are asked here. And in case if I have not answered this, kindly repeat those questions during that part 2. I'll be able to answer to those questions. So thank you one and all. Come again by 14 GMT. See you.